The best way to beat the market long term is to invest in stocks that can compound your money over a long period of time. Netflix, Amazon, Apple, these are companies that have beaten the market over a long period of time. So investors need to let their winners win, let compounding work in your favor. That is how foolish investors operate. So I want to go through 3 stocks to buy and hold for the next 20 years. These are long term time horizons, and that's the way that we want to think as investors. Let's start with the first stock. That is Hims and Hers. Hims and Hers is disrupting the healthcare marketplace. They're not taking insurance. So like any disruptive company, they're doing something different than the traditional companies, rather than trying to go through insurance and play against established companies. They have 24-hour access to their platform, and they essentially have a doctor and pharmacy integration in their telehealth business. And while Hims and Hers started with things like ED and hair loss, they're expanding into more and more specialties. They're adding menopause and perimenopause this year, testosterone treatments, and those specialties will expand over time. And we've seen the success of the platform in their numbers. You can see in this chart, the company's compound annual growth rate since the middle of 2022, a phenomenal 76%. And the company is now profitable on a net income basis, and those operating margins are increasing steadily. Management has said that they can increase those margins 1 to 3% per year going forward. So you have revenue growth, margin expansion, and operating leverage in the business. And let's not forget, Hims and Hers is investing in artificial intelligence, being able to answer questions with AI for their consumers. Like a lot of the most successful companies over the past 10 or 20 years, Hims and Hers is an aggregator. It's where customers are going to answer their healthcare questions. And as Hims and Hers can answer more of those questions, its addressable market gets bigger and bigger. So as you think about where this company is going to be 20 years from now, I think there's a lot of growth potential. And with just a $10.7 billion market cap, this is a company that could grow 10x or far more than that over the next 10 to 20 years. So I love where Hims and Hers is positioned. Let's talk about another company with huge potential. That's Coinbase. They are building the new financial rails for the blockchain ecosystem. They have the base blockchain. They are building wallets. They just updated the Coinbase wallet recently. And they're plugging into traditional finance. They're the custodian for most of the Bitcoin ETFs, Ethereum ETFs, and other companies. They're also the central trading location for most of the institutions that are getting into cryptocurrencies. And oh, by the way, they helped create the USDC stablecoin. And a recent stablecoin law passed in the United States should make it easier for companies to build on stablecoins, potentially disrupting credit card and debit card transactions. That stablecoin business is already about $1 billion in revenue for Coinbase, and that is set to potentially grow tremendously over the next few years. They get 100% of the stablecoin revenue from the Coinbase ecosystem and then split 50-50 with Circle, the rest of the revenue that comes in. So they are actually generating more revenue, more profit from the USDC token than Circle, which is a highly valued public company today. Now, Coinbase is no longer a small company. The market cap just passed $100 billion recently. But as a disruptive player in the financial ecosystem, I still think there's a lot of potential for the company to grow 10, 20 years from now. That's why we want to have that long-term time horizon. Don't think about what Coinbase is going to be 6 months from now. Think about what it's going to be 20 years from now. And I think this is a company that could be a combination of AWS, a big bank, and the identification tools for the blockchain. That's a lot of potential for the company. And with founder Brian Armstrong still running operations there, I think there's a ton of growth potential for Coinbase long term. The third stock today is Uber. This is the biggest content and food aggregator in the world today. They continue to grow rapidly, double-digit growth rate, despite the fact that they have a massive size, not only in the US, but also around the world. What they've really done over the last few years is leaned into their operating leverage and expanded their free cash flow. But 20 years from now, Uber is likely to look very different than it does today. And that's where autonomy comes in. Uber is positioning itself to be the center of autonomous driving as the demand aggregator for autonomous driving companies. I think it's pretty clear at this point there's going to be dozens of autonomous vehicle operators and fleet operators, and it's not likely that we're going to have 10 or 15 new apps that we're going to interact with. It's more likely that we're going to use the existing apps that we have, like Uber, and use autonomy in the background. They're going to basically white label a lot of these operators that they're already partnering with. Companies like Waymo, Lucid, Volkswagen, they are bringing autonomous vehicles to market, and that is going to increase the supply, likely lower the costs for Uber, and I think that expands their market potential dramatically I think this is the kind of company that could at least 10x, if not more, the size of their market over the next 10 or 20 years. And that bodes well for the company despite the fact that it's already a $190 billion market cap. So why does buy and hold investing work? Because if you buy great companies and let them compound over time, that is the best way to beat the market. Don't panic over short-term blips in operations or in a stock price. Check in on that performance regularly to make sure that thesis continues to play out. But if you buy and hold great stocks for decades, the returns can be absolutely phenomenal. Now, with the Motley Fool, your comments make us all smarter. So please comment below with your research and insights about these companies. And check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.